Hello and welcome to this video. In this video we're going to talk about, well, what if you haven't had chance to get onto QuickBooks yet, or you're looking to get to QuickBooks later but still have to file this year's tax return. What's the bare minimum of records that you're either going to need to pass to your accountant or for you to do yourself? Stay tuned when we look at what information you need to complete your tax return.
I told him I can be a fighter if you want. I'll be there to catch you if you fall. I can make it brighter when it starts. I told him I would do it all for you, and I know you do it for me.
Hello and welcome to this video. My name's Patrick, a Chartered Accountant, Certified UK Trainer for Intuit, and also that QuickBooks chap. Now, with the run up to January, we're going to have a lot of people out there needing to file a tax return. And on here, we've talked about how QuickBooks can help you massively with regards to getting that tax return done. But obviously, that's only going to be helpful to you if you've been using QuickBooks throughout your tax return period. What about if you had to look at a period before you were on QuickBooks? What about if you just had base records? Now I'm going to base this on a UK reseller, so we're going to be looking at them buying and selling from eBay. So what sort of income statements are they going to need versus what sort of expenses they could generate. But this can account for anyone who's looking to get information together. Now this information they're getting together may be so you can complete your own tax return, or it might be because you need to pass it on to an accountant. And if your accountant's asking for information, this is a nice little guide for what information you need to provide. Now we're basing this on the smallest of small clients. So if you have more of an established business, you might want to look at one of my other videos where we look at this in much more detail. But this one, we're just looking at the very basics, the bare minimum. What do you need to be able to provide, be able to make sure you're compliant for that tax return? Also remember that we're going through a transition period at the moment, and coming up in the next couple of years is what's called MTD, Making Tax Digital. Therefore, at that point, we won't have a choice. We will have to use some form of software like QuickBooks to be able to file our tax returns. But for now, we're still in a grace period where we are able just to keep manual records and use those manual records to produce our tax return. And that's what we're going to talk about today. So let's have a look and see what our bare minimum of information we're going to need. So first of all, we need to concentrate on the most important aspect of it, your income. Now, more than anything else, you need to be really careful of your income. Remember what a tax return is, it's self-assessment. And that's the concept that HMRC at this point in time do not know how much you've earned in that particular period. So on the tax return, you're going to be given the information they need. So they want to know your gross income. And what they will see is one number, your gross income for that particular period. But what you need to be able to do is be able to give context to that number, be able to prove that number. Now that could be an Excel spreadsheet that adds up all your months or your weeks, and then the information put on that spreadsheet should be backed up by invoices or till receipts or something along those lines. But in today's example, with them being an eBay reseller, we're going to take that eBay statement and we're going to use that one. But remember, whatever number you put in as your total turnover, you need to be able to back that up. Because if HMRC ever comes around and starts doing investigations or inquiries, you're going to be able to prove how that number was made. So always make sure you can back up whatever number it is you put on any of those tax return boxes. Okay then, so we're asked to find our turnover. Now I'm just I can put any old figure in here at this point, but all I want to do now is, well, how do I back that number up? What it is that I need to do? Now remember, this particular example is an eBay reseller. So I'm going to go into the eBay account and I'm going to go over to my eBay. I'm going to go to selling. And from selling, I'm going to go to performance. And from performance, I'm going to go to sales. Now what I can do here is I can set a custom date range. Now one thing you have to remember on this one is the maximum you're allowed is 3 months. So all I'm going to do is the beginning of the month, the year. I'm just doing calendar years for this one. And I'm going to generate the report on there. Now I'll have a nice little report that I can use this print report button feature here. Save as PDF. I'm going to print that one off for me. I'm going to name it so that I'll always remember what the name is. So this is month, quarter one. Now this report is telling me everything I need to know. So it's telling me what my total sales for that particular period was, how much postage I had there, and what my selling cost was. So that's how much is going to be put in as fees. And then it gives me a nice list to break down what it was I sold in that period. So that's pretty useful to me. But remember my key point here, I need to have my gross sales. All of those postage fees, all of those eBay fees, they're all cost of sales. They're all cost to the business. So my most important number here is that total figure. Now, the other thing you've got to remember is what is your period. So in this case, we're just putting together some random figures here. But reality wise, most of you are going to go from the 1st of April all the way to the 31st of March of a particular tax year, because that's going to be the most easiest way to account for your profits. Now, you don't have to, you can go for a different period, but it does get really complicated in that first period, in that last period. So my recommendation and my advice to you is to always just account for particular tax years. Keep it nice and straightforward, make it easier on yourself. If you have an accountant on board, they will be able to do the hard work for you, and there are sweet spots that you can choose, so you end up actually paying tax in a more efficient way. It's always going to be the same tax figure, it's just that you'll be able to pay it in different installments, and you'll be able to pay it in different areas. So always consult a business advisor for that advice. But for this one, we're going to keep it dead straightforward. You're going from the 1st of April all the way to the 31st of March. So that first period should be April, May, June. Then you're going to have to do July, August, September, etc, etc. So even though my Q1 2020 is here, it's actually going to be Q4 for my actual tax return. And my next job is to take all 4 of those and add them together. So I'd use an Excel spreadsheet, something along those lines, and I'd produce my set of accounts based on those figures. But don't forget, you may have sold outside of eBay in that particular period. So think about any Facebook sales, any jumble sales, anything you've done outside of there, and make sure to include, and again, you've got to include the gross figure. Outside of eBay, it's a lot more simple to react to, because most of the time, it's going to be what you sold it for. Most of the other platforms don't have any fees or anything to account for. So we've got our income, we've got into that sales summary, we've got a printout of it, keep a copy of that printout somewhere. And that's going to form basis of your income. It's also going to give you some of your first costs as well. So you've got your income that you're going to put in that income box just here. And you're going to be basically adding up all 4 of these figures, plus anything else you may have as well to worry about. And then once you've done that, you've got that element already included. And the next thing to do is talk about your expense. Now, we're going to talk about it as a detailed breakdown. The reason for that, the reason we're going to be doing detailed, even though you can just do that simplified, is because it's going to give you an opportunity to go through as almost like a checklist. Doing the detailed one means that it's going to be asking you for expenses that are allowable, and it may make you think about expenses that would be worthwhile including there. So I always recommend using that detailed option, just so you can go through as almost like a checklist and go, have I got expenses that relate to telephone? Yes or no? Tick, put the costs in there if you need to. Let's have a look. So I'm doing as a detailed breakdown. Let's save and continue. So this first one is cost of goods brought for resale or goods used. And in our business, in our opportunity, in our example, this is us buying those items that we've then sold on. So this is us looking at all those costs associated with it. So you're going to have some form of records for this. An Excel spreadsheet, a book, whatever it's going to be. But you're going to need to be able to go through and itemize all those items you've bought and be able to show those items. Now, if you're using primarily charities or auction houses, they're dead straightforward because you're given a nice little receipt or an invoice and you get to use that as your proof of purchase. Boot sales, on the other hand, take a look at some of the videos we've done on this channel or when I collaborated with Nick Hills, and there's tips and tricks on how to make sure that you can account for those in the most efficient way. But regardless of how you've accounted for them, you need to be able to prove it. So remember, you're going to be putting a figure for the total amount of spend in a particular year on all these items. So it doesn't matter what that figure is, you need to be able to say, well, this figure came from this spreadsheet or this working book or this piece of paper. And this piece of paper consists of all these transactions that I can then go and bring in if I need to. And that's the key here, making sure that you can have what's called an audit trail. Your cost of goods, here's my items, and they all match up together. So that's cost of goods. Dead straightforward, it's what you've bought, what you've paid for. Let's have a look at some of the other expenses to include. Car, van and travel expenses. Well, what we're asking for here is anything to do with expenses to you getting to and from buying or selling in this particular instance. And it's really straightforward actually if you think about it, because from your point of view, it's going to be any travel costs you may have incurred. So maybe you've had to jump on a train or onto a taxi or whatever it's going to be. Those costs are going to be allowable. If you're going to and from, say, a charity shop or a boot sale. But one of the easiest ones to account for is mileage. So if you're gone in your car, then use that as a form of expenses. Now, HMRC are really generous when it comes to mileage. But the idea of mileage is the idea that you record how much mileage you've spent on actual work. So in this example, again, it's about when you drive in your car or your van and you're going to go to some place to buy some new items for this particular business that you're then going to resell on. And HMRC then, as soon as you've got that mileage, you're then able to claim 45p for the first 10,000 and it jumps down to 25p. That 45p though is designed to be for the whole cost of the car. So if you choose to go for mileage, then you can't put in repair costs or fuel costs or anything that relates to running the vehicle. The mileage is all encompassing of all of those costs. On the flip side, you can put in all of those costs in, but then you can't choose to claim mileage as well. But if you are doing that, be very, very careful and make sure you apply some sort of private proportion to it. And what I mean by that is if you go through and you put all of your costs of that car in a particular year, so your MOT, your repairs, your insurance, your fuel, your anything else that could relate to that cost of that car, then at some point you've driven some private mileage as well as your business mileage as well. And it's key that you show that you've looked at both of those two elements of it. And if say 20% of it was for business and 80% was for private, we'll take all those costs and only show on here the 20% of the cost of the business. The next one is wages and salary. Now this can be a bit tricky for most. Wages and salary is for if you pay wages or salary to external people, so that's not yourself. And if you are putting wages and salary, you must be doing some form of PAYE scheme and be able to actually show that you've actually taken the tax off them at the point. Now, if you know what a PAYE scheme and you're issuing wages and everything else, you'll know exactly what figures to put in here. But if you aren't doing those sort of things, then this box is something I would highly recommend just skipping at this point, unless you do have some legitimate subcontracting costs. And if they're legitimate, that means they've given you an invoice for the work they've done. So if you've had someone in and you've literally paid them by the hour or whatever it's going to be, and they've invoiced you for that on a temporary basis, then that's absolutely fine. But I do urge you to think about if that is legitimately a subcontractor, or is it what HMRC would describe as disguised wages. That's for you to decide and you to understand, but most of these costs here, you've got to be really careful of. This is one of those really sensitive areas. If you put wages down there, you definitely have to have some sort of PAYE scheme. You definitely have to be running some wages for them and actually produce them a payslip each and every week, each and every month. And if you're going to be subcontracting, then you're going to have to be able to show HMRC that you've done your due diligence and that these people you've been paying for are legitimate subcontractors, and it's not that you've just decided to pay them subcontractor just so you don't have to do a pay slip. So be really careful when you start putting anything into that box. Rents, rates, power, insurance costs. Unless you have some sort of separate area, so if you've got yourself a tack container or anything like that, then definitely all those costs, put them into the business. They're all definitely costs associated. And that's everything from the rent itself to heat and light to maybe having to put some repairs and renewals in there. Whatever it's going to be, those costs are all going to be allowable and all appear somewhere on your tax return. But if you're doing it from home, I urge you to start considering using the small business allowances. Basically, HMRC have already considered what the cost is for doing use of home, and that's the cost you should be considering putting in. Now, there is an argument to make that you can put more costs in there, so you could start looking at the business proportion of your house and how much it costs to run, the business within the house. But just be really careful and do take some professional advice on it. If done incorrectly, there is a possibility you can taint your actual property. And that means that when you come to sell the property down the line, there's potential you can give yourself a tax bill. And you don't want to go down those sort of routes if you can help it. So take some professional advice if you are looking to get some business costs in there, just so you can see what the consequences are going to be. It's not just that you get to claim for those expenses. There may well be some adverse tax consequences later down the line that you want to avoid. Repairs, maintenance and property. Again, only really put your repairs and maintenance in there if you've got a separate property cost. Accountancy, legal, so if you're paying for an accountant or if you've got some software to help you or any cost like that, then put it in there. Interest, bank and credit card fees, so finance charges. This is where I would put all my charges, and think about your eBay charges here. So we've not put them in yet, so make sure you're putting those sort of costs in there and make sure those costs are accounted for. Telephone, fax, so make sure you can look at all your telephone and any other allowable expenses. So here we can start thinking about any bigger expenses that you might need to put in there. Now, one thing we haven't put in here, and it's something I would probably incorporate in the cost of goods brought figure, is I would start thinking about your postage. Don't forget your postage and your actual cost for getting your items to the customer. But notice, because we've gone through that more complicated form and we've actually got all those different boxes to fill out, you know then that you're going through looking at what those allowable expenses are. And it gives you a better opportunity to go through and put in there. Now, if this was you passing the information on to your your accountant, if you have an accountant to do this for you, then use this as an opportunity to think about what it is they need and push that information to them. One of the big tips I would always recommend about all of this now when you're doing it for your first time is how can you make this easier for yourself going forward? Well, one of the ways to make it easier for you is to use a piece of software like QuickBooks. Definitely, it's going to make your life easier. And also it puts them all into the right boxes for you. But the other thing I would always consider someone looking at is a separate bank account. The most simplistic way to run any business is to make sure you've got yourself a separate bank account. Now, it doesn't necessarily mean to be or need to be an actual business bank account, because they can have some additional costs associated with it. And if you're just small and figuring out, you don't necessarily need to do one, but do make sure that when you reach the right thresholds, you look to upgrade that account. But just having a separate bank account is a massive plus. And then be disciplined on it. Any business expense you can think of, make sure it's flowing through that business account. And if you do have an accountant, it's their job to go through and see what's allowable and not allowable. But at least if you're putting it through there, the accountant will be able to see that and assess that. And for you, if you're doing it yourself, having the cost going through that business, well, the first thing I would always do is look at that business bank account, look at all those costs, and then just apply them to those accounts that are there. But it's so much easier to be able to go through and assess a bank account than it is trying to go back and think back to, well, what were my telephone costs? What costs can I put in there? Everything else. If you have a separate bank account, it's just a case of analysing that bank account and be able to go from there. The final bit to worry about is what we call our capital allowances. So if you've bought any assets, and what I mean by assets is things like PCs or big machinery or something along those lines, that's when you want to be putting the information here. And majority of you small business owners out there, you're going to be putting it all in the annual investment allowance, which basically means that for small businesses, you get to put the full cost in the year that you buy it, as opposed to, which is far more complicated, having to spread those costs out on a year-by-year basis. There we have it, a look at what is it that you need to put in for your tax return. Now, it doesn't matter if you're going to be passing that information on to your accountant or if you're doing it yourself, always just look at those boxes and what those boxes are. For your income side of things, try and make it as straightforward as possible. Like we did there, we used a whole quarter, and that report there gave us the opportunity to be able to look at the income, less all those costs associated with it. And you can take that as one item and put them into either your spreadsheet, your book, or into your QuickBooks account if you need to. Either way, what you're doing there is you're making it so that instead of having to go transaction by transaction, you're putting it all in as one big bulk. And that's absolutely fine, because with that bulk, with that transaction and you putting in that actual element, you can then reference back to that report we've just shown you, and that report breaks it all down for you as how those final numbers were made. So put it into those quarters for you for your income if you're using this particular method. Get yourself to an annual figure, and that annual figure is what you want to be putting in that tax return as income. Then after that, start looking at those expenses. Your cost of sales is always going to be the most important and biggest number, so make sure you spend some time going through and making sure you account for all of your stock that you've bought, and then just use that almost checklist. Go down each of those boxes. If it's travel costs, consider mileage. Any of the other costs, just make sure that you can account for it and you can prove it, and you'll be absolutely fine. On this channel, we've done a video on actually how to complete that tax return, so why not jump over to that and have a look at it. But this is about making sure you've got those records in place. Having those records in place and making sure that you've got everything you need for that tax return. If this video's at all been helpful to you, don't forget to like, subscribe and all that jazz. Good luck doing your tax return. If you do need any help on it, don't forget my friends over at Boffix will be more than happy to have a look and even do a little check of those if you need to. hello@boffix.com is your friend. My name's been Aaron Patrick. As always, it's been an absolute pleasure to do this video for you, and I will see you in the next video. Bye for now.
I told him I can be a fighter if you want. I'll be there to catch you if you fall. I can make it brighter when it starts. I told him I would do it all for you, and I know you do it for me too. I can be a fighter if you want, if you want. I can be a fighter. I can be a fighter if you want. I can be a fighter if you want. Oh, the way that I feel, yeah, I know that it's real, 'cause I can get him out of my head. I don't care what we do, everything's feeling new. Even if we stay in bed, my heart is saying yeah, 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 yeah. You know I want him, nah, 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 nah. My heart is saying yeah, 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 yeah.
Hello and thank you for watching that video. What you may not know is this channel that you've watched this video from is part of a wider group. That wider group is called AppleCore Production, and the 3 channels that we have involved are as follows: Aaron Patrick, the QuickBooks Chat, Boffix Tax Tip. Finally, we have AppleCore Live and Geeky. All the links and everything are down below in the description, but it really means a lot to us if you can go and give a like to the other channels as well.